everyone, and welcome to the Timeshare Board Members Association 2022 webinar series. I'd like to welcome everyone today for joining us for the Hurricane Impacts on Timeshare Resorts webinar. And I'd like to introduce our TBMA President, Shep Altshuler, to get things kicked off. Shep?
Yes, hi everybody. It's good to be back together again and participate again with our webinar series. So I'd like to start off making a few introductions. We're concerned about the impact that these hurricanes have had on timeshare resorts. And I'd like to start off first with Scott McGregor, Executive Vice President, COO of Lemon Juice Capital Solutions in Orlando. So Scott, you want to say a few welcoming remarks?
Well, good afternoon, Shep, and thank you for putting this together and allowing us to participate. This is an important topic. It's impacting a lot of people as we speak today. So thank you for giving us some time to talk about solutions for these people that deserve it.
Great. And Scott McGinnis, Vice President of Property and Casualty with Gregory and Appel in Indianapolis, Indiana. And today everybody's heads are spinning with the concerns about insurance and risk management. So Scott, why don't you say a few opening remarks?
Yeah, thank you, Shep, and hi, everyone. Yeah, you're right. Everyone's heads are spinning these days, including mine. It's tough to keep up, after the hurricanes in Florida. The insurance world is changing quickly. We don't know exactly where we're going other than it's not a good place, but we're doing our best to keep up with it and be able to offer viable options to everyone out there.
Good. And Leon Basie, CEO, President, Global Point Closing Services out of Boca Raton, Florida. So Leon, you'll be addressing the complexities of title insurance and all the issues surrounding that. So say a quick hello.
Hello, Shep and everyone. Thank you for having me and Scott. I appreciate being invited. And yes, our hearts go out to those that have been affected by these hurricanes down there in Florida. It's such a great vacation and resort home spot for everybody and many residences. So title usually comes up last. I think that we want to be on the forefront of helping resolve these issues and settle so people can get back to vacationing down and are getting back to their condos in Florida.
Great. I also want to say thanks to Sharon Newman again for coordinating the this webinar and handling the back of house challenges. And so Sharon, let's go to the next slide. So before we get started, we have our reminder that content presented today is not to be considered as providing legal advice. You should be acting on advice of legal counsel and professional advisors. Be sure you're in compliance with your governing documents and state statutes. And in a time of crisis, contingency planning and safety protocols are a definite must. Next slide, please. So we're looking at the path to recovery during these critical times, and we want to get a perspective of the big picture of what's going on in the marketplace, different concerns that are evolving. So Scott McGregor, would you mind starting us off?
Yeah, no, I'd be pleased to, Shep. I think the first thing to remember that we all have to remember is that a timeshare resort is a community of owners. And when we're thinking about the best possible outcome for a particular property, it's really thinking about what's the best possible outcome for the vast majority of the owners that are part of that community. And that's what we want to talk about today. How do we determine where we want to go given the situation for each property, and how do we get there? Having been through this personally a number of times in the past, the timing, the cost, and the uncertainty of resolving claims can't be overestimated. No matter how quickly you think you can get something accomplished, it's always going to take longer. These days, particularly, the cost of resolving the issue, whether it's the professional or legal fees that may be consumed, or the cost of materials if we're repairing or rebuilding, all of these need to be taken into consideration while you're choosing what outcome we're trying to get to for the owners. And then we can't forget that these owners will be obligated to pay maintenance fees during the process. and most likely not have any opportunity to use the product during that. And as inherently unfair as that may sound, it is this community of owners that bears the responsibility for maintaining and maintaining the property and seeing through the process. So let's keep in mind that we're here to find the best possible options for these folks that are the owners at these timeshare resorts.
Scott McGinnis, do you want to make any comments about the overall situation?
Yeah, well, part of that, point number 2 there, the uncertainty of resolving claims, that is a big uncertainty because it's a difficult process with these insurance carriers. You're mostly dealing with specialty carriers, and often they are unadmitted, which means they're not directly admitted in the state of Florida or whatever state they happen to be operating in. So it's a burdensome process. Most agents like myself don't have any real leverage with those carriers. We can push them as hard as we want, but don't really have the leverage against them. So they're notoriously slow, they're difficult to deal with, and it can be a grueling process going through the whole claim process.
How about the title side here from the overall, things are different now maybe than they were, before all these storms came into effect. Leon, do you want to make any comments here in the general sense?
Well, I think Scott mentioned it, we're dealing with multiple owners, whether we're dealing with the timeshare regime or whether we're dealing with the condominium association, we're dealing with multiple owners. And it's going to come down no matter, no matter the decisions that are made, somebody needs to consider bringing those owners together to communicate resolutions. And there's many hurdles legally, obviously, on the insurance side from home, the claims that were just mentioned by Scott. But there's things as I'm sitting here just thinking what these groups are going to be facing is, even if you start building, there's mechanics lien considerations, there's builder considerations, there's lenders that are going to require title work to be done. Finding out who all your partner owners are is just difficult. So I think just the bringing of the mass ownerships together brings a lot of uncertainty, and it can be overwhelming for any board, whether it's a timeshare board or again a condominium association board.
Sharon, next slide. So let's move on here. Scott, maybe talk about the categories of resorts that are affected by the storm. What are you seeing out there?
Well, and we've been in touch with a number of properties already in South Florida, and they do seem to fall into one of these categories. And I think the important thing to think about is that depending on the particular situation of your property and which outcome you're seeking, each one of those requires a unique plan. I would like to say that I'm really pleased that we have somebody from the title insurance side on the conversation today. In my first experience with a major hurricane affecting a property here in Florida, it was one of the things that we didn't do at the beginning, that if I could go back in time, we would have started all of the title search work right at the beginning of the process instead of later on, and it would have saved us a lot of time, and we'll get more into that. But really, depending on the nature of your property and its location and the extent of the damage, we do find the resorts fall into one of these 3 categories of they're severely damaged and the association has already determined that they won't try to rebuild. And we'll talk about some of the issues and ramifications of making that decision early on. It might be severely damaged, but the intent is to work through the claims process and rebuild the property, and we'll try to add some reality around how difficult and lengthy that process might be. And then there are some resorts that were fortunate to have received just a little bit of damage, and they're working through the reconstruction phase now. But I think, as we'll talk about in a couple of minutes, they're seeing challenges that are probably unique to this market that were not there a year or 2 or 3 years ago.
Leon, I want to ask you, and following up what Scott was saying, should resorts that have not been affected at all really begin, a plan now for how they're going to be dealing with the eventualities to have, relative to title insurance and clearing title? Is there advanced planning required from your perspective?
Well, obviously, we're living in a time where hurricanes and other disasters have affected the properties, not just in Florida, but in other locations, as well as the economy has taken effect on certain properties that it is always wise to understand your ownership base and keep abreast of that. And there's products out there that do that. We've heard on the radio title lock and things like that. And there's products out there that can be provided to keep up when deed or ownership changes occur in your association or in your ownership roles. And we might get into this later, but I'd like to point out too that there's bad players out there. I've been hearing on the news right and left about bad players taking advantage of these situations as well. And the legal and the title role can help mitigate some of those bad players as well. And get into that further, maybe in questions or in follow-up.
Scott McGinnis, when we look at the different categories, in dealing with the risk side and the complexities, is there, I guess there's no one solution fits all, but does the level of damage, require less work and less intensity than something that a property that may be completely damaged and destroyed?
Yeah, there are different ways that an insurance carrier can handle these situations. The first one, they're severely damaged, not rebuilding. There is usually a provision in every property policy that gives the insured the right not to rebuild, but there is a repercussion on the other end. Normally, that property is going to be insured on a replacement cost basis, meaning the insurance carrier will pay them what it costs to replace that policy up to the policy limit. If they choose not to rebuild, then coverage reverts to actual cash value, which is the depreciated amount. And then they get that check and they can walk away. So there are different ways of handling a severely damaged building. And if they choose to rebuild, they get replacement costs. If they choose not to rebuild, they get actual cash value, which is going to be a lesser amount.
Sharon, next slide. Okay, so we're looking at special assessments and materials and municipalities, all these complicating factors. Scott, Scott McGregor, would you please address these?
Sure. And whatever plan you're forming, you need to incorporate, of course, everything that you know, but even more importantly, those things that you don't know or don't anticipate. And these are, I think, just some of the things that can spoil the best made plans. Even if the property is adequately insured on paper, at the end of the day and at the end of the time it takes to settle that claim, the net amount that the association receives may be substantially inadequate to do what was set out, especially if it's repairing and reopening, after you pay the adjuster and legal cost and other fees that may come into play in settling that claim. So we have to anticipate that in addition to the assessments that the owners have to pay during the closure and rebuilding period, when you get to the end, there just may not be enough money to pay everything that needs to be done, and the owners will be the ones that will be obligated to come up with the funds. More than ever, all of us that operated during the pandemic know that it was hard enough to get materials and labor before a hurricane adds on to it. Now, especially in southwestern Florida, in addition to those supply chain and labor shortages that we're already experiencing, there's a huge demand for materials, and you just may find that your timing is dramatically affected by the shortage of materials and labor. There are some municipalities that are considering rezoning areas and re-examining the density, especially if the building was substantially damaged and has to be rebuilt. Many municipalities are reconsidering what may be rebuildable. And that may have an impact certainly on the value and use of the land, or even in the rebuilding process during, if the property intends to continue on. And a lot of those decisions haven't been made. So that's definitely something in the category of something that is technically unknowable right now and needs to be considered in your plan. And then whatever path is chosen, there are the governance issues of making sure that both state law and the governing documents are followed. And then the title issues, as we referred to here earlier in talking with Leon, all of those things need to be taken into consideration for terminating the timeshare regime. It may even prove to be an opportunity to restructure and do some cleanup now, even if you plan to continue on. So all of these are the types of difficult issues that need to be put into any sort of strategic plan to satisfy the majority of the owners.
Scott McGinnis, is there anything here to add on the insurance side? Because there's a lot of coordination that has to take place between different parties, looking at municipalities, government agencies. Some resorts may need a quick fix on cash flow to get money infused into the operations. Where do you come in, as an insurance provider?
Yeah, well, Scott had mentioned that, there's possibility that insurance proceeds can be inadequate. And that's very true, and it's not uncommon. And I'll point out a couple of areas where that happens. One of them is, say you have an older building and it needs to be rebuilt to current codes, and that the cost of that is not reflected in the replacement cost amount there. So you're automatically in the hole there. They don't have enough funds to build that build it back as it needs to be built. Now there is a coverage for that. It's called ordinance or law. And it's a limit that you establish, $1 million. It's usually the minimum on that. But what it does is the cost to upgrade to modern codes is covered part of that. You might have an undamaged portion of a building that needs to be torn down. Under the normal insurance contract, that tear down's not going to be covered, but it is under the ordinance or law coverage. So that is sometimes an overlooked coverage and can be the source of an inadequate proceed at the end of the day.
Leon, we have title insurance. Scott, McGregor brought that up. So there are properties that are considering, restructuring, reorganizing, or reimagining their resort. So where do you come in on that side of it, on the title side?
Well, obviously, we coordinate with the association to meet the needs to gather all the titles, ownership together to figure out what they want to do and put them together. And then, as you mentioned, there could be an opportunity to restructure the property, either to terminate or partition of some sort, depending on what's left, and perhaps keep half of it a timeshare or cap half of it something else, or maybe it's not even going to be, everybody's just going to sell it for some other purpose. So we come into that, obviously we have to put, as I mentioned earlier, the ownership numbers, depending on how many units and how it was sold, could be, multiple owners that have to come together, and we have to have all of them, their title work, know who they are. Distribution of funds to me is also another concern, or something I'm hearing coming out of the conversation, whether or not an insurance company writes a check to the association for a timeshare that is no longer me, that's going to be a distribution of funds that need to go to a title company for through their escrow account to distribute those funds. Same as in if it terminates, obviously, those that are due a payoff from their ownership, if it's no longer to be there, that goes all through our process of terminating and closing and getting all the ownership together. We facilitate, or a title company will facilitate all of those matters.
Very good, Sharon. Next slide. So we're looking at the insurance issue. So Scott, what is the reality of what's going on in the ground? I've heard stories that property was damaged and they had flood insurance and they didn't, but the roof blew off and they didn't have coverage for wind damage, and money is, not coming fast enough. And where do you fit into all these things to consider? You look at possibility of negotiated settlements. Where do you act in an advisory capacity to your clients over these issues?
Well, it really first starts with the structuring of the policy at the very beginning, because like you said, there are multiple definitions of flood, there are definitions of wind, and it all has to match what your needs are. So just, if somebody says you have flood insurance, that means backup of sewers and drains. It may not mean storm surge. It may not mean wind-driven rain. So you really have to be careful in analyzing the policy to begin with, so you know what you have. And you may not be able to get it all in one source. A lot of resort properties will purchase flood from the National Flood Insurance Program. But there are limitations to that too. You don't get any kind of business interruption coverage under the National Flood Program. And then there are restrictions of coverage there as well. You may not be able to get a high enough limit, but then you can go to, private flood markets. There are private insurance markets on there to buy excess coverage. So it's really the structuring of the policy is the first thing you have to do to protect yourself. Then at the time of a claim, then you do need to work. Your agents should work as your advocate, and they should initially help you prepare the claim submission. And that's getting it to the right carriers, triggering the right coverage lines within the policy, all of that sort of thing, and monitoring it, getting it to the right people. That's part of it. In fact, we're assisting now on some claims where we're going to physically walk through the properties to look where the claims are, where the damage is, all of that sort of thing. So we have firsthand knowledge and we can talk to the adjuster and help expedite the whole process. So that the agent should take on the role of the advocate. And as I mentioned earlier, it's likely going to be a battle. You have to push on the carriers and to really keep things moving, because they are swamped. They're going to be swamped, and you need to document things correctly, and documentation is really key. Pictures and documents and records and all of this stuff, especially if you're submitting a business interruption type claim, that takes a lot of documentation and is a very time-consuming process. So it's a lot of work to stay up to speed and get that claim submitted properly and stay on top of it to get it paid in the end.
Is there a sort of a concern that the carriers prefer to keep the money in their banks rather than in the client's bank account, and that they might set up delays in paper shuffling? Or is that nothing to worry about? If your paperwork is in order, you'll have your claims expedited on a timely basis.
You know, I think the latter is more true. There are some bad ones out there that are going to intentionally delay. And then there are others out there that are going to delay because the paperwork isn't quite up to snuff. And then they move on to the next loss to deal with. So the better prepared your paperwork is and documentation, the smoother your claim is going to go. And it's just easier for the insurance carrier to deal with it. I would say most of the time, the insurance carriers are honest about it and are not bad people and want to process a claim as quickly as possible. So you don't want to have some insufficiency in there that prevents them from doing that.
Scott McGregor, do you want to talk about any real life situations in your dealings in this area?
Well, I would certainly agree with Scott that most of the time the goal is, even of the insurer, is to get it settled fairly and quickly. But I think that especially in these big events, there's so much ambiguity. And as Scott was saying, was this damage caused by wind-driven rain? Was it really flood? We were talking not long ago that here in Daytona Beach, after Hurricane Nicole, which just wiped out the beach and took literally several feet off that beach and started eroding underneath the buildings, there were 25 large buildings condemned because the footings were impacted by where there used to be a seawall or there used to be dunes. Just the action of the waves or the flood surge coming in completely undermined those buildings to the point they had to be condemned. And I can only guess that there's probably going to be some ambiguity or confusion or even denials of coverage when people look at the damage that was caused and say, what category does that fit into? And you may find that it doesn't fit neatly into any particular category.
Mm-hmm.
Is that right, Scott?
That's right. And I'm glad you said that, because just recently I was reviewing a policy for a resort in Daytona Beach, and they did have flood coverage, and I wanted to see if that included erosion, because that's what a lot of that water did from Nicole. It pulled the sand back. And fortunately, the way this particular carrier worded their definition of flood, erosion was included. That's why it's a burdensome thing and nothing more boring than going through an insurance policy and reading forms. But sometimes it's a very important thing to do. And unfortunately, there's nothing standard about it. Every insurance company has their own definitions for everything.
So I think we can go on to the next slide, because we'll bring in the title aspects, and there's insurance related to that, Sharon. So let's move to the next slide. So Leon, pick up the conversation here. Why searching all owners, property titles, necessary and complicated. What are the complications and what makes it so difficult? And is there a mindset out there that a timeshare property with 50 owners per unit is different than a wholly owned condominium, which makes it more complicated or challenging, or those issues been kind of taken into consideration in this day and age?
No, each county maintains its own property database. A lot of them have become automated and easier, but at the end of the day, it is still a tedious process to put them all together through the financial downturn. And through COVID, we've seen a lot of property ownership change that's not been reflected in the records. And so again, it's essential that we put all that together. And it's as we mentioned earlier, it's a simple mass of these projects. Granted, a 50-unit condominium works differently. It has a 50 separate owners, which would be easier to search, as if you were to take 50 units, multiply it times 52 weeks, let's say. The math on that is multiple owners that we have to search. And then there's the biennial owners, which obviously everybody knows is you get your timeshare ownership every other year. So there's multiple owners that we the sooner the better we start searching. You do not want to wait to midstream or toward the ends of a project to say, well, wait a second now. We haven't considered these issues. We don't know who all the properties owners are because we haven't started the search process. And in a situation like we're dealing with in Florida right now, we're talking about multiple properties. So there's only so many title companies to go around. There's only so many that have specialty in this. Not to say that others can't do it, but it is a complicated, tedious task that we are all licensed as such to do and perform, and so that's what makes it so complicated.
Scott
Leon,
McGregor.
I've spoken with a board member recently whose property is closed and they plan to sell. And I think they're doing all the right things and using the provisions of their declaration to terminate the plan because it was substantially damaged and they're not going to rebuild. But the assumption was that once that was done, they could simply bring the property to market and it would be a quick and fast sale. Not realizing, I think, the need to go back and make sure that all of those owners are still tenants in common of the property and they all still have a vested interest. And I'm guessing the title insurer is going to want some certification that they've all been properly identified and noticed. So it was my perspective on this particular property that they still needed to search each one of the owner titles to get the property sold.
That's exactly right. Unlike Scott McGinnis's business, title insurance is about protecting from items that have happened in the past, not a hurricane or a natural disaster that might happen in the future, or a car accident that might happen in the future, or something like that. So we live in a country that title insurance is provided at the change of ownership, and thus there's not too many title companies that are going to just turn the head to not getting all the property owners that are due their rights covered before they write a policy, whether it's to a new buyer that may be buying at the property terminates, or if it's a loan that they need to take out to rebuild. There's going to be something that somebody's going to need the collateral on, and maybe the board has the authority to sign that loan policy, but it's not likely without some kind of vote, and the title company is going to want to make sure that we've done our search, that they get at least the majority, if not all, 100% of the ownership taken into consideration. And as I mentioned before, also the distribution of that.
Good, Sharon, let's go to the next slide. So here, let's start with Scott McGregor to walk through this, because I'm looking at strategic planning with the board to consider all options and the overall project management, the owners and what they're concerned about. But there's strategic planning. We say at my disclaimer, you have to have contingency plans, because you look at these situations that happen in real life. And if you're planning out 30 years, but tomorrow, all of a sudden you have, an unusual storm in a southern community, a snowstorm or whatever kind of event occurs. So talk about strategic planning and what does that really mean in today's really strange environment, climate-wise?
Well, and this is what we focus on here at Lemon Juice is working through the details of a specific property and working with the board of directors to put together a true strategic plan that takes into consideration a lot of the things that we've discussed. And as we've said a couple of times, it's not the things that are easily determined. It's really all those unknowns that become the most important elements of the strategic plan, of making sure that you're providing for contingency to identify those issues and deal with them in the proper time. And that means starting a strategic plan with the professionals that can help inform you to that. The insurance professionals like Scott McGinnis. And as I said earlier, you can't bring your title professionals like Leon in early enough. You'll definitely need someone with liaison with the city and the county as you're figuring through the rebuilding and the zoning. Here in Florida, especially with Senate Bill 4B that was 4D, I'm sorry, that was passed earlier this year, that's going to require engineering studies of projects in the future. Getting those engineers involved now will not only be critical for this particular phase of the planning, but even for your future compliance. So putting the plan together with the professionals and bringing in all the knowns and unknowns is what a really good strategic plan starts with. Once the plan is determined, it needs to be managed, and you can't, when you've got a number of professionals working together and moving parts, making sure that one part of that is completed before the next dependency is approached is important. So not just creating the plan, but managing it effectively. I don't think we can overemphasize the third bullet point about communications with owners. As I said at the beginning, this is a community of owners that we're representing, that we're trying to find a solution for, and we need their input. And we use survey tools a lot because surveys are very effective two-way communication. It's a way for the board to say, we are interested to know what all of our owners think, what the best outcomes for them might be. So it's a way to communicate the status of the property and what the board's trying to accomplish while getting the feedback from the owners. Is their preference to rebuild? Are they anxious to get back on vacation because they had plans that have been interrupted because the vehicle to get them there, their timeshare, may not be available? Or what is it that's best for them, so that the board has visibility into really what the owners want. We've touched on the legal and zoning and compliance, and we can certainly address some more specifics as we get into the Q&A. But for me, I think for all of us, most of our owners love their vacation ownership. They use it regularly. Here in Southwestern Florida, particular, these were destination resorts where people would go, but a lot of them exchange as well. And the longer it takes to work through the process of repair, of rebuilding, or of going through the governance, even if it's a termination or restructuring, we got to remember that these owners aren't vacationing. They're paying their maintenance fees, but they're not getting what it is that they purchased in the first place and what's very important to them. And we think here at Lemon Juice, and in conjunction with some of the other professional resources, we can help a board to find a way to get those owners on vacation now so that they feel they're still getting value, and you can maintain that connection with those folks and maintain their support. And there are ways to get them on vacation now, even while their property is undergoing these long-term repairs or modifications, or even negotiations with the insurer. So all of these things need to be considered in creating the plan and then executing it. But let's keep the owners first and foremost, and remember that we're here to serve them, and they're the ones that are suffering because they don't have access to their vacation property.
I think we should move on to Q&A unless Scott McGinnis, you want to comment on this particular topic?
No, I don't have anything on this topic.
Okay, and Leon?
Well, I would just like to add that, I mentioned the bad players. I think when you look at a situation like this in Florida, in any situation, it leads to an opportunity for people to take advantage of the situation. And I can't imagine everything that a board that is most often a voluntary board is going through right now. So looking to a professional company to help manage these issues and have their communication come from a single source, to me would be, even outside of the title. Only reason I say it is because in the title world, we hear the horror stories every day, and we're required to keep up to date on compliance issues and some of the scams that are out there. So I just can't imagine. To me, it seems logical to go to a company such as Scott's to get single source information and manage all this, just to stave that off, because they're probably getting phone calls left and right from people coming from this way and that way trying to take advantage of the situation.
Right, so Sharon, let's move on to the next slide. So here we have some Q&A. Maintenance fees are due and payable during Hurricane Ian. Do those fees need to be credited, refunded to owners as long as the resort remains closed? And Scott, I want you to talk about this because here it's important, as we say in the beginning, you really have to be talking to your professional advisors, because you have you have to be guided by your governing documents. You have to be governed by your state statutes, and having your auditor, your accounting firm, your legal team. So talk about the need to really coordinate with your professional advisors as you're looking at this particular question.
Well, you're exactly right. There will need to be some legal interpretation of language. Many of these governing documents were written 40 years ago or more. And so there's a lot of considerations into the text of the documents and how that may interplay with current law that governs the property. So you're definitely going to need that type of legal expertise. It's not the type of thing as a board that you want to guess about. It's something specifically that you want a professional to help you with. As we've said a number of times, getting all of the professionals together and informed about the condition of the property, the goals of the owners, and participating and creating that plan, it's important. And as Leon said, I like the way he said it, having a single point of contact is important, because that way you have somebody that's keeping all of those different professional resources working towards the same goal with the same set of information. And as specifically the question about maintenance fees, we've said certainly that owners are obligated to pay maintenance fees even when the property is closed. Yes, we've received questions about, well, some of my maintenance fees were for things that we're not getting, like housekeeping and things of that nature. And most of those budgets have already been determined and promulgated for 2023. I think if I'm sitting in the board seat, as we've heard a number of times, the funds required to complete the project, whether it's remodeling, rebuilding, restructuring, or just terminating, it's very, very easy to underestimate what those fees are. So I can't imagine an association actually refunding, and they may not legally be able to do that to their owners. I think once the final whatever is going to happen to that property is determined, then they may make some decisions about the money that they have in cash and what the best use of that is for. But all of those are decisions that require professionals in both the restructuring side, but certainly in the legal side, to opine to the board clients so that they can make informed and appropriate decisions.
So Scott McGinnis, on question 2, so here, this points out the need to really, this is coming up, from a board member. And the question here is, there could be confusions as to language within a given policy. Does loss of use insurance mean business interruption insurance? And how important is it on questions like this that are posed in 2, for them to really not to second guess it, but to sit down with their professional advisors, whomever, and really get specific answers to these types of questions that are posed right here.
Right. Yeah, I'm actually really glad to see this question on here. And it really ties into question number 1 too, because maintenance fees are the primary source of revenue for a timeshare resort. And loss of use insurance, it goes by different names. Most of the time, it's called business interruption or business income. And it is designed to reimburse the resort for the expenses that continue once they are shut down, once they are interrupted. And there is another component to that too, which is extra expense, which is any expenses you incur in order to continue to operate, to avoid the interruption. Those are covered as well. Now the problem we run into with insurance language is most of these forms are somewhat standard and they're not designed for a timeshare resort. And maintenance fees are not necessarily even mentioned in there, even though they're the primary source of revenue. And the problem that I have seen before is, say all the maintenance fees get paid in January. In June, you have a hurricane and the insurance company is looking at this and they're saying, well, you got paid for the year. You have not sustained a business interruption loss. You got all your revenue. And so they say there is no business income claim. So what they're not taking into consideration is the pay for those members that may have not paid their maintenance fees. There might be some delinquent ones. There may be some that expect to be reimbursed. That's not mentioned in this policy language at all. And the other thing is the cost to pay for alternative lodging. If the resort is unavailable, maybe the resort could arrange for them to stay someplace else and keep them happy for that vacation week. But we have been successful in getting some language written into the policy, manuscripted ourselves. Now, not every time, not every carrier is willing to do this, but we reword the business income definition to also pay for maintenance fees that become uncollectible due to the claim, or to reimburse paid up maintenance fees back to the owners to keep them happy, and to the cost of alternative lodging. So there's really kind of 3 choices there that could be utilized depending on the situation. And that's a very important coverage to have, because I know of some management companies and some resort managers that feel that business interruption coverage is a waste because they're not going to get paid on it. But, and sometimes that's true if you rely on standard wording, which most resorts probably have standard wording. So that is the topic that should be addressed ahead of time.
Okay, Leon, is there anything here, or should we move on to the next slide?
No, I'm gonna leave that one to the professionals.
Okay, so let's go on to the next slide, Sharon. So here, it looks like we're looking at, what I look as sort of accounting areas, and, correct me if I'm wrong, on questions 3 and 4. So maybe we should start with Scott to talk about these issues. Scott McGregor, are these really accounting issues, or are they insurance issues? And if they're accounting issues, how would you go about addressing it, Scott McGregor?
Well, and I think this is a perfect example of where people need to work together to both understand what's being addressed in the insurance policy and then what's the math. I mean, the math of picking out fixed or variable expenses, there's as much art as science in that, depending on how you analyze pieces of the budget, like your housekeeping expenses, even staffing expenses. Some people may say you don't need a general manager while the property is closed. I would think that you probably, depending on the nature of the real estate, you definitely need somebody that's going to remain responsible for the daily operation and upkeep and oversight and security of the property. So I think it really boils down to having somebody like Scott McGinnis that can look and find the language or potential exceptions in the policy, and then work with the other professionals, both legal, and financial to make sure that we're taking the proper numbers out of the budget or the audit or other financial instrument, depending on what's needed to best meet the nature of the language in the policy. I've seen at least one property in the past where, going back to the maintenance fee issue, where the insurer said, well, maintenance fees really aren't a business income. This is essentially a club. These are membership dues. These are all of these owners contributing to the maintenance of the property, and that's not really business income. Business income is things like rental and commercial revenues. And so we had a fight on the claim for the business interruption based on maintenance fees. And their initial position was each of the owners should go back and look at their personal insurance, their homeowner's insurance, and whether it covers their non-use of the property or not. So, certainly matching the nature of the language and the intent of the policies with the actual financial operation of the properties can be a complicated conversation, and hopefully the association has folks representing them that can help them get the best outcome based on that language.
Right. So Scott McGinnis, am I wrong to look at this and saying these questions are really more accounting questions? You're going to write out a check. You don't categorize them as how they're going to be applied, right? You should be talking to.
Well, actually, I think question 3 is an insurance question. And,
okay.
And I would say, well, first of all, I would say when it says fixed or variable, we refer to it as continuing and non-continuing. If a resort has continuing expenses, and that may be payroll, utilities, taxes, all of those kind of continuing expenses are going to be covered under most business income forms. So that what they don't pay are the non-continuing expenses. And that is really up for the resort to decide that, although you may have a carrier that challenges some of those, but the resort, just makes their case for whether or not they needed to continue that expense. So that really, I think that is a resort's responsibility to determine which of those are continuing or non-continuing.
Scott, it seems, again, there's an opportunity for the resorts that weren't damaged, right? And, it's a lot of the luck of the draw were that the eye of the hurricane came across and things of that nature. But for the properties that weren't damaged, I think this is a great opportunity to sit down with their insurance agent and say, but what if that was us? What if we got hit with the hurricane and we lost our beach and we had all this erosion, or this happened or that happened? Would we be covered?
Right.
And
I totally agree with that. And they could provide their agent with a set of questions. Will my flood insurance respond to a storm surge? Will it respond to wind-driven rain? Will it respond to erosion of the sand below the resort? All of those kind of questions. Will my business interruption coverage pay for lost maintenance fees or the reimbursement of maintenance fees? So yeah, they could go in with a checklist of questions, and that would really be a smart thing to do.
Very good. Before we go on to closing remarks, I just want to add a question. It's on my mind. I want to ask Leon about this. In my thinking, title insurance is the cul-de-sac of all this on reorganizing or at the end of the day, you have to have title insurance. Is that a true statement?
Well, it's true, Shep. I've spoken to in some of your things before, and I always start out every time I speak with the same comment. You can't throw a rock and not hit a title insurance policy, whether it's your home, a condominium, a shopping mall, a business. Everything in this country is underwritten by a title insurance policy. And like I mentioned earlier, we insure for things that happened in the past. So it may seem that a lot of people, I didn't get in this business I wanted to be a football player or policeman. I don't know how I got into the title insurance business, but here I am. It's been very good to me. Uh, and you're right. It ends with us. We are in concert with the lawyers. We're in concert with the lenders. We're in concert with everybody because we keep track and we do the title and then we get it insured, and then there's other functions that we can do, such as escrow, for example, to if there's amounts to be distributed, we can make sure they're done. We didn't get into some of the builder issues where, through the downturn, when the economy in 2008, when the economy crashed, we ended up with all these projects, high rises that stopped midstream, and all the builders didn't get paid. And so if there are mechanics liens, all the builders file for their mechanics liens, and that tied up real estate for years. The mechanics lien issues alone, before they were funded and paid off, and the interest just kept compounding on those liens, and they're recorded in the county land record. So there's a lot to our business and what goes into it, other than what we've all simply talked about is deeds transferring from one owner to the next, which has to be done. But there's a multitude of other things that are going to come into play with rebuilding and restructuring these resorts.
Leon,
Sharon,
I've
let's-
seen a
Sorry,
couple
go ahead.
properties. I saw a property in Daytona Beach where a good chunk of the property itself is no longer there. So because it got washed out to sea and the lot size actually changed. And then I'm imagining in some of these really devastated communities where they're talking about rebuilding infrastructure, there's going to be new utility easements and things of that nature. So I'm guessing that just the catastrophic nature of some of these events, like these hurricanes, even has an impact on the title insurer's underwriting of the property, because events on the ground may be physically changing during this process.
That's true as well. All the property in Florida, there's usually a provision in the title insurance policy to every owner, and on the lender's policy as well, that runs to the ocean water mark, which means the water is, as we know, can rise and fall, and most of those we've not seen it very often where it affects the ownership of the land, but most often the common elements is what I'm getting to, but not somebody's unit where half the building is gone. In that situation, though, the air rights and the rights of real property is still there. Just because there's not a unit there doesn't mean there's not land there somewhere. So that will be a very interesting to see how those properties restructure themselves and what they do with that ownership. But that does not, condemnation might come into play, but that does not necessarily change your ownership.
Very good. So for the sake of time, I think we have to move on to the next slide. So here we are. This has been really fascinating. It just looks like catastrophic events that may happen unexpectedly take very long time to resolve. And so I'd like maybe as we have the closing remarks, and I'll start with Scott McGregor. Do you just want to talk a little bit about that and just say, how our listeners might get in touch with you as well?
Well, certainly we welcome an email. It's the best way to get in touch with me. I'm happy to provide anybody our telephone number, but there's 2 emails on the screen, and we welcome just the opportunity to share the experience that we're having with other properties or have had in the past, or just even talk through the whole strategic planning and execution options and approaches. And Shep, again, I appreciate your putting together a forum like this that allows us to communicate to any of the owners that may hear or see this, that there are lots of questions, but there are solutions and options for just about every particular situation. You just need the right people to help guide you and make sure all the right questions are being asked.
Scott McGinnis?
Yeah, I guess I would say that it's not a pretty picture in the insurance industry right now. The property insurance market across the country, especially in Florida, is kind of in a meltdown right now. And we're still awaiting to see what the impact from Nicole and Ian is going to be. Carriers are in the process of negotiating their reinsurance terms. Those are expected to go up dramatically. So I think it would be wise for board members to prepare for probably a substantial increase in premium, an increase in deductibles, maybe more restrictive policy terms. So yeah, it's going to hurt. I would advise them to get as early a start as possible in the renewal process and ask specific questions like Scott mentioned before to make sure you get what you're expecting to get. And you also need to be open to some options. There might be some options in terms of deductibles or loss limits or things like that that might take some of the pain away financially. And we can hope that this is a temporary situation, but I expect it's going to run throughout all of 2023. And depending on how that year goes from a catastrophe standpoint, maybe we'll see some relief the following year, but get an early start is what I would say.
Well, thanks, Scott. Leon, you want to have something informative about our current world that we're living in and your closing remarks?
Well, I just thank you for having me, Shep, and again, my condolences, I guess, or go out to those that have been affected by these hurricanes. My only point again would be that while these hurricanes were common occurrences, I'm sure that every property is affected differently. They each have different types of insurance coverages, and so there's probably a multitude of different solutions and resolutions depending on how they want to go and how they were affected. I would again reiterate that a company like Scott McGregor's, for example, is probably a good source to go to for a one-stop shopping to help navigate these things. And then they can get companies like mine involved, that we can start doing the title process so they're not done at the last minute where they think they're going to get somebody needs to get some money or a distribution, and then they realize, well, wait, we didn't consider these issues. So that's basically my conclusion to it. Thank you. Thanks for having me, Shep.
Thank you. So I want to thank you all for being here. Sharon, let's go to the next slide. So here we are again. What's coming up? We have going to continue our in-person conferences in 2023. We have 2 events scheduled: Orlando, Florida, May 1st, 2nd, 2023, Las Vegas, Nevada, September 11th and 12th, 2023. This is a good time to confirm your reservations. You can find information at our website at tbmassoc.org. You can also send us an email to staff@tbmassoc.org. And again, I want to thank our panelists. I want to thank Sharon Newman, and I want to wish everybody a healthy and happy new year. Stay well now, and we will be in touch. Thank you. Bye now.